This is the FM Gold channel of All India Radio. In the program News Analysis, we now bring you a discussion on international rating of India's economy. The participants are Maithili Bhusnurmat, consulting editor, The Economic Times, and Arjun J. Chaudhary, economic journalist.
Maithili, very warm welcome to the program. Today's topic is the S&P may downgrade India further from its existing BBB- rating that it announced yesterday. And this rating is regarding the investment grade of India. Maithili, would you agree with the rating announced by Standard & Poor this time around?
Well, I would think it's broadly positive because if you look at it, though they have reaffirmed India's BBB- and also reaffirmed the negative outlook that they've given us earlier, given the fact that it already warned and there was a 1 in 3 chance of downgrading India, I think it is positive that at least we have escaped so far. But what they've clearly indicated is this kind of tolerance will not continue. Post-elections, if we don't have a government that puts in place proper policies to revive the economy, then there is a very strong likelihood of the rating actually going down. We're not talking really in terms of the outlook, we're talking in terms of the rating. So if the rating goes down, that will have disastrous consequences for the country. So I think the warning is very clear that so far we've given you a long rope, but don't expect this long rope to continue. And in fact, they've used the word that if there is continued policy impasse, as it were. So that means they're clearly saying that there already is policy paralysis, as it were. So if that continues, so that in fact is fairly damaging. So the plus is, yes, that they've given you some more space, breathing space, as it were. And the minuses is they very clearly indicated that this kind of tolerance will not continue unless the next government gets its act together. Then there is a very strong likelihood of the rating actually going further down, in which case we will slip to below investment grade. And that, as I said, would be pretty disastrous for the economy.
How important is the winter session of Parliament before the general elections next year?
Well, I don't think rating agencies expect anything dramatic to happen in the winter session of Parliament, and given that our parliamentary sessions, except for the last session, which turned out to be fairly fruitful, till then our parliamentarians have not really done us very proud. So I don't think much is expected from the winter session. In any case, I think whatever measures the government has taken in the past 6 months, the government has taken a number of policy initiatives to its credit. But all these things have come too late in the day because all these policies, there is a certain time before that gets translated into grassroots action at the ground level. And you can't expect people to kind of do anything very dramatic just when you have about a year to go into the elections. So even if your government announces things like FDI in retail, you open up, nobody's going to rush in because you're wary of whether the next government, when it comes, will it reverse those decisions. It's happened in India. Even the same government has done flip-flops in policy in many sectors. So naturally, any investor will be wary. So while the government has done a number of things to its credit during the past 6 months, these have all come too late and too close to elections for investors to really take that leap of faith and invest in the country. So I think most investors, including and rating agencies also, are waiting to see what kind of government we'll have in place. If that government continues with the initiatives that the present government has announced, if the government gives the clear signal that, look, we are inclined towards reform, we will go further towards structural reform, then you will see a huge positive about the country, and certainly the rating path might even go up. But if that does not happen, and that is a big if, given the fact that in India, it's very difficult to predict the outcome of elections. Really, nobody's really got it right. And as things stand, it doesn't look as if any party, any of the two national parties, is going to get a clear majority. So we are going to be in for fairly uncertain times. So I think the winter session of Parliament per se will really not make a difference to the rating agencies. What they're looking for is action on the ground, and that we're not going to see until after the election.
Well, notwithstanding the political economics of the situation, looking at FDI investment into the country, it's actually gone up marginally, but not against the benchmark of the year before. There has been FDI relaxation of norms, especially in telecom, now increased to 100%. In aviation, for instance, you have Tata Group and the Singapore Airlines forming a joint venture for their Tata Sea Airlines, for instance, 49% in aviation. Vodafone has said that they would invest additional billions of dollars into back-end and front-end infrastructure. This has been action on the ground. Are you saying that the rollout might be delayed?
No, it was even like when Tata announced a deal with Singapore Airlines, you're not going to see the money coming in immediately. So these are all they're setting in place the systems as a way. So what the government has done is really, you've laid out, done the groundwork, you've become the atmosphere, maybe the environment, has become more of an enabler. So had these very same steps been taken, say, about 2 years ago or 3 years ago, we might have been reaping the benefits today. Unfortunately, that is not the situation. It's come too close to elections. So while companies are getting their act together in terms of doing the groundwork, I think we will not see any major change in investment sentiment until you have a stable government in place. And mind you, Arjun, another factor that really kind of goes against us is the fact that the global environment is also not very friendly. So unless we have to kind of compensate for the fact that, I wouldn't say doldrums, but it's still in a bad shape. The US seems to be coming out, but not so much, though we've seen US third quarter GDP numbers at 2.8, which is very satisfactory, but the clouds are not entirely lifted on the global environment. So when the external environment is not very conducive, it is very important that the domestic environment compensates for the fact that the external environment is not conducive. Unfortunately, whether you look at the fiscal deficit, where the finance minister has said that he's drawn a red line under 4.8, S&P expects it to be something like 7.2. Now, there's a huge difference between 4.8 and 7.2. So I think clearly, even if the FM does abide by his promise, there is a worry that maybe he'll do that by kind of rolling over some expenditure, maybe he'll do it by not paying for subsidies, etc., etc. So that kind of thing becomes a little worrisome, because as in the first 6 months of the year, we've already crossed 76% of the fiscal deficit target for the entire year. So you'll really have to be a magician to pull off that kind of thing of 4.8% to GDP, to fiscal deficit. We have to kind of give him the benefit of doubt. Maybe he will do it, because last year he did do it. But as of now, everybody is a little skeptical, especially in a run-up to the elections. Governments do tend to announce, populist measures. We've already seen the announcement of the pay commission, the 7th pay commission. And though that impact of that is not going to be felt now, there is a great deal of wariness, because as and when the commission does announce its recommendations, governments will find it very difficult not to accept. So even if this year we achieve that fiscal deficit target, you clearly are setting in place policies which will make it very difficult for the next government to be fiscally prudent in future. Again, we've seen in the food security bill, so the government says that they will ensure that subsidies will not go out of hand, it will be 2% of GDP. There's a certain amount of skepticism, warranted or unwarranted, about whether the government will really be able to stick to its promises. So rating agencies naturally tend to take a very dispassionate view of all these things, and I think hence that is why they are skeptical, and it's reflected in the fact that while they have kind of reiterated the present position, they've clearly said that, look, if things don't improve, and the word they use that if there is continued policy drift, then we will in that case be forced to lower the rating within a year. Now that's a pretty dire warning. So I think the government must take heed of the message rather than just dismissing the messenger.
Well, the government has taken heed of it even before. The RBI governor, of course, announcing measures to ensure there are dollar deposits into the accounts by individuals and groups and companies as alike, and of course also decreasing the overnight interest rate for lending purposes. Although the repo rate has been increased, that is basically to shore up deposits. There have been measures taken by the RBI in terms of ensuring that the rupee does not depreciate further against the dollar. But when you say that it's late in the day, what prevented the government from taking the earlier steps maybe 2 or 3 years back?
The government had the numbers. Under UPA 1, you will at least say that the left parties were there and they were constraining them from taking these measures, reformist measures. It's very difficult really to understand why UPA 2 did not take these reform measures earlier, because they were in a much stronger position in UPA 2 than in UPA 1. The left parties really didn't have a voice at all in UPA 2. So a little difficult to comprehend. My sense, if I could just, my interpretation, I think there was a certain amount of complacency which crept in, because after the financial crisis, the Indian economy continued to do well. So we felt perhaps that, that we were kind of decoupled from the rest of the world, and there was a certain momentum that would automatically ensure that we grow. Clearly hasn't happened, because in a globalized environment, there is no country that can afford or thinks that you will live in an isolated situation. So I think by the time the government realized that actually we are also as much in it, they all sink or swim together, and if it hits the US in 2008, it's only a matter of time because the slowdown hits us, because we are so globalized. So demand for our exports must come from other countries. So if they are slowing down, our exports will also slow down. So I think that what happened was that was one reason. We didn't wake up to the fact that we will slow down, number one. Number two, I think there's a realization now that the stimulus packages that we announced immediately after the crisis, both monetary and fiscal, they should have been withdrawn a little earlier. But there again, I think the government was a little wary that just in case the growth again slipped. So So this is hindsight. See, hindsight is always 2020. At that particular point of time, I think the government thought that we need not do that. So I think it woke up a little late in the day, did not realize that, and that is a mistake that perhaps any government, particularly in a democracy, would do, because any democratic government would always look at, the implications. You want to be populist, you want to be favored by the things like removing subsidies. Nobody likes to pay a higher rate for oil, for petrol, for LPG. So these are politically tough decisions. And in a coalition, it's not easy. Let's accept it. It's not easy for any government. At the end of the day, if these are required to be done, they have to be done. So I think it's a question of educating the people, telling the people that, look, there's no way we can subsidize LPG forever because somebody has to pay a price. So if not today, you'll have to pay the price later by way of fiscal deficit. We will push up interest rates, which will push up prices, everything. And at the end of the day, let's be very clear that things like LPG are consumed by the middle and the upper middle class. There's no reason why they should be subsidized. So I think the government needs to tell its story better and tell people that if you want growth, sustainable growth, then you must be prepared to pay higher prices in a country that is so poor, particularly for commodities which are used by the middle and upper middle class. So I think that is where the government perhaps erred, but I think this is true of democracies all over the world. It's very difficult to tell the people that, look, you have to pay more. Nobody likes to pay more, whether it is taxes, whether it is more for your oil, whether it's more for your LPG. So it is a question of how much, how do you get the people to kind of come with you, win the population over, like things like, say, if you look at disinvestment. Today there is no disagreement at all on disinvestment, but if you remember when disinvestment started, there was so much of a furor about it. So it's a question about how governments manage to take people along by telling them what is necessary and how you can never have long-term gain without short-term pain.
That's a very interesting point you brought in there. Speaking about balance sheet, the fiscal deficit, even last year, a lot of it was rolled over to the current financial year. A subsidy cost was in fact deferred. And that allowed the finance minister to meet his fiscal deficit target. If the same is carried out this time, just looking at the trade deficit right now, that's also come down drastically because we decided to import less of gold, of course, with restrictions, and oil as well. So these measures being taken right now to consolidate the economy, you don't see that this would improve the investment grade, or do reforms have to be implemented post-elections, and is there a timeline for it? And would investors really stop from investing in the country if India gets a grade below investment grade?
Oh, certainly. If our rating falls to below investment grade, not only will you see people not coming in, you will see a large number of people exiting. So clearly that is not an option. We have to retain our investment grade. As far as the current account deficit is concerned, certainly we have done much better. In fact, this year we may end, as the finance minister has said, perhaps at 60 billion current account deficit. So that is certainly a positive. But the difference between the current account deficit and the fiscal deficit is that it's much easier to get a manageable current account deficit. The fiscal deficit is much, much more difficult to rein in, which is why the finance minister really has this challenge on his hands. And as far as there are two issues really, what we call the twin deficits, the current account deficit and the fiscal deficit. The current account deficit, yes, has been largely we've managed to rein it in. But as far as the fiscal deficit is concerned, I don't think we managed to rein it in. We may on paper manage to show that 4.8, but there will be a lot of numbers underneath, as it were, the balance sheet, as it were, off balance sheet items, off budget items, which will definitely have to be taken into consideration. So I think on the fiscal deficit front, there certainly are serious concerns, and that is what is reflected in the rating agency's not very positive view about India.
So what missed 2 or 3 years back is being made up right now in this final year of this government before elections are announced. There have also been a number of reports from companies like Goldman Sachs regarding what the government status would be. Do you think that it is fair to make this kind of an announcement at this stage, even before the government is announced for the next term? Do you see some sort of complicity here?
Not at all, in the sense that you can't prevent people from saying what they're saying. If Goldman Sachs has a view, they're perfectly free to say it. The question is how much credibility do people attach to it. So if they're willing to believe that, then fine. But you can't prevent them from, you may not like that opinion, but that is their opinion and you cannot dispute that. The fact is, at the end of the day, I think what people are really looking for, what rating agencies are looking for, is a stable government.
Well, thank you, Mithili, for giving us your views on the S&P rating BBB- for India.
You were listening to a discussion on international rating of India's economy. The participants were Maithili Bhusnurmat, consulting editor, The Economic Times, and Arjun J. Chowdhury, economic journalist. It came to you in the program News Analysis, produced and presented by the News Services Division of All India Radio. This program is also available on our website, newsonair.nic.in. You may email your opinion about the program at airnsttalks@gmail.com.